friends, our first share for today is Grindwell Norton. So today you'll see share has been flat. If we see the return of 6 months, it has provided 10% return in last 6 months, and in last 1 year it has provided a return of 8%, which is not that great. And if we see the return for 5 years, then you'll see a good change. The return for 5 years is 280%, which is very good return. Now let's look at the company profile and see what it does. So this company is in the business of manufacturing abrasives, ceramics and plastic, and providing IT services as well. So it's a subsidiary of Saint-Gobain company, and you must have heard about Saint-Gobain company. So that's the parent company of Grindwell Norton. And the abrasives that it manufactures, those are used in industries like steel, bearings, auto ancillaries, auto OEMs, cutting tools, needle, razor, food processing, and general engineering. Its current market cap is 21,000, which is not that big. So companies still have a lot of potential to grow and become more big. So here you can see this company is the market leader in its industry. So the industry name is Abrasive and Grinding Wheels, and this is currently trading at 1942, and it is currently available at a discount of 16.58%. You can see the return profile of the company. In the last 10 years it has provided 31% CAGR return, and in last 5 years 30%, in last 3 years 50%, last 1 year 8%. So you see that the more time you give to the company, the better return it provides, the more stable return it provides. So in last 3 years you see 50, and then as and when you start increasing your horizon, then it has provided a good healthy CAGR of that 30%. CAGR is a very good CAGR. It is not at all less. This is the market leader of its industry, so you can expect good CAGR from this company. And as and when India will become a developed nation, there will be more capex. So these kind of the products that it manufactures will be used more. There will be more demand for that product, and this company will continue to do well, is what I feel. It's what my viewpoint, but you can also do your research and then invest accordingly. Let's now look at the chart of this company. Now we are at the chart of the company, and you'll see that the share is currently trading at 1945, and it is taking the support at this level. So this is currently working as its support. You can consider 1900 as its latest support. So right now it is available near its support, so and at a discount of 16.5%. So if you like this company, you can think about investing in this company, but do keep the investment horizon very long. It should be at least 3 years minimum, and then maximum, the more you invest, the more time you give to the company, the better the return will be. Our next stock is Avenue Supermart or DMart. So today you can see it is hovering around 3900. In 6 months, if I see, it has provided a return of 9%, and in 1 year it has provided a negative return of 20%. And if I look at 5 years, then it is giving a return of 250%. So this, you must have seen by now, that has been the case always for most of the good companies, that as soon as we change the horizon to 5 years, that is when you start seeing very good returns. And that's why we say to invest for long term, because that is where you will make money. Because in short term, nobody knows where the stock will move, whether it will go up or down. But in the long term, if it is a good company, fundamentally strong company, the business of the company is good, it will go up in 5 years time. Now if you talk about the business of this company, you must have seen the stores. So what it does is it opens stores, and most of the stores that it opens are owned by this company. It's not on rent, so they don't have to pay any interest on those stores. So they buy the property, then they open their stores, and they offer the product at very good discount. And how they get so much discount is because they buy in bulk, and the inventory cycle for DMart is also very less. So when they purchase the stock, the time that they are able to sell that stock is also very less, and they pay their suppliers also early, because of which they get discount. And because they are buying in bulk, they are getting a lot of discount from the customer. Plus what they also do is, in their stores, whenever you enter, whenever you see the first counters, for those counters also it charges the company. So if you'll see a counter for Nestle, then it means that the Nestle company will be paying something extra to this company to have that counter at the start. So this is how this company is earning. It gets discount from the company, and then it passes majority of that discount to its customer, and because of which you always see lot of customers in their stores. You can go and check on any day or Saturday and Sunday, and you'll see for yourself if the business is doing fine or not, and then take a call. So this is the advantage in these kind of company, that you can do your research, ground research yourself also. So I like the business model, and right now there is still lot of cities or states where DMart is still not present. So there is a lot of area for DMart to cover and expand, which means their revenue will expand, which means the profit will increase, which eventually will mean that this share price will also increase in the future. So there is still a lot of growth available for this company. So I have full conviction on this company. If you like this company, if you like the business of this company, you can also think about it. Now we are at the chart for DMart, and you'll see it is currently taking support at this level, which is 3900. If it goes down further, then the next support will be 3750, and then at every 250 levels it has a support. And if the share price goes further down, those will be the level to buy on dips and accumulate more. But right now also, if you don't have this company, it is available at a very good discount. You can think about it. Our next company is Bajaj Finance. Once again, very good company, right now available at 6750 price. If you'll see the 6-month return, it is 16%, and 1-year return is in negative 5%. But again, if I click on 5, you see that it is around 300% return that this company has provided. The business model of this company is also very good. It's into the lending business, consumer lending business. It is the leader in the NBFC sector, which means non-banking finance sector. Just like SDFC is the leader in the banking sector, this is the leader in the NBFC sector. And this is one blue chip company which provides the return like a mid cap company. So its CAGR for last 10 years have been around 50%. So now we are at the chart of the company, and you'll see it has been taking support at its support level. So 6750 was its support level, and it is taking support at the same level. Its next support, if it goes further down, will be around 65, and in this as well, for every 250 there is a support available. So if you get this company below this 6750, if it is available at 6500, then again it will be a good adding point, and as and when it goes down, it will be a very good opportunity to buy on dip and to accumulate this stock, because once this stock will start moving, it will move in multiple folds. Why? Because the profit of this company is also growing at a very fast rate. So its market cap is huge, but that does not mean that it will stop growing. Till the time its profit is growing, the company will continue to grow, the share price of the company will continue to grow. So you can do your own research on this one as well, and if you like the company, you can think about investing. Our next company is Berger Paint. So this company also, if you see 6-month return, it has provided 8%. 1-month return is in negative -18, and 5-year return again in positive at 140%, which again is not less. It is at around CAGR of 20%, which is also good CAGR. And this company has provided even better CAGR than Asian Paint. So Asian Paint is the #1 paint company in India, and Berger Paint is the second best company in India for paint sector. And in terms of return, it has provided better return than Asian Paint in last 10 years. So its 10-year return till now at this point also has been around 28%. After being at a discount of even more than 26%. So again, for this company, I don't have to explain too much on the business side. It is on the paint sector. It deals mostly into the industrial coating and paint. So right now there is a temporary problem of inflation and increase in the raw material for these type of company, paint sector. So that's why you're seeing these company at a discount. You're getting these company at a discount. Now we are at the chart for Berger Paint, and you'll see it has been going down. And right now, so it was going down in this direction, and it made a low at around 575. And from there it has gone up a little bit, and right now it is at its resistance. So the point which was earlier its support, so you can see this point, now it has become its resistance. So if it breaks this point, it can definitely go up from here, but if it does not break this, there's a possibility that it may consolidate at this level only, or it may go down and test its support again, which is 575. And one more thing which I wanted to mention about this stock is that recently the promoters of this company have been buying this stock continuously. So from last 4 or 5 days, I'm getting a message on screener that there has been a purchase, which we can consider as a positive sign, because promoters are increasing their stakes and they are confident that company will recover from this temporary issues. So if you like the company, right now is the time, or if you get it again at 575, then again it will be a very attractive level to get into this stock. So that's it in this video. We'll meet in the next video with some other information. Thank you.